What is accounts? Accounts is a process of recording, interpreting, summarizing, and reporting of financial transactions of business entity or organization for a decision making. Coming to this, what do you understand by it? As an accountant, you have to record, interpret, summarize, and give reports of the financial transaction of that business or an organization for decision making. You have to, after collecting data, after collecting financial data of an organization, you need to interpret it so that the owner or your client will understand, and out of it they will make decision on how to go about their finances. In this, you have to give the net worth of that entity, and then if they are making move, if they are progressing, you have to let them know. If they are not progressing, you have to let them know. If it is going concern, you got to let them know. If it is not, you got to let them know so that they will make decision and improve on their business. So it is therefore important to understand the accounting principles. There are some principles, rules, and terms that will help you in recording your work whenever it is necessary, whether it is accounting, equation, trial balance, financial statements, journals, ledger, or what. You need all these things. They have rules, they have terms. All these things are terms and rules which you will use in reporting and recording all the financial transactions of an entity. So these terms are the major accounting foundations. Now we are going to talk about accounting equation. What is accounting equation? It is simply assets equals equity and plus liability. Listen again. What is accounting equation? Accounting equation means assets equals equity plus liability. So coming to that, what do you understand by assets? Assets is what you own in an organization or a business entity. It is what belongs to that business. Assets is what you use in running the business, what you have in that business, what you own in the business. Then another one is equity. Equity is a shareholder's capital or claim. Shareholders' capital or claim. It is their interest in that business, the interest of the owners of the business. That is what is known as shareholders. While liability is what you owe or what the company owe. That is trade or accounts payable. You are owing. That is what liability means. So maybe your creditors in a business. That is what we mean by liabilities. So now there are some examples of assets. I got to show you some examples of assets because from this you can be able to know where to post assets in your work and where to post equity, where to post your liability when it comes to your work. Now there are some of these examples which I have here, like stock, inventory or goods, furniture and fittings, machineries, buildings, land, vehicle, trade receivables. That is, receivable means your debtors, those that are owing you, those you are supposed to collect money from them in the future after payment. Those that maybe they have collected some of your goods or what, but they have not paid you. Then another one is cash at hand, so cash at bank, equipment like television, radio sets, and fixed deposits. All these things are assets owned by a business owner, assets owned by an organization owner. These are the assets. Whenever you are posting, you got to post these things under assets. Another example, coming to equity has its own example like capital, e.g. shareholders capital. Drawings, this is personal drawings, like the owner of a business, maybe some of the money he collected or even assets he collected during the process of the business, anything he collected out of that business, it is drawing. Then income and expenses. These are the examples of equity. Then coming to liability, some of the examples of liability is loan. Like loan, somebody took out from that business, that is the loan. Or loan, you collected loan in order to run that business. It means you are owing loan, like something like debenture or anything loan, anything, any money or assets or anything you collected in order to run that business. It means you are owing, it is a loan. Then trade payables stroke accounts payables or credit. These are the people maybe you are owing either in cash or any or assets. These are the creditors. They are all under liabilities. It is a liability to the company. And then bank overdraft, when you must have overdrawn more than what you have in the bank, when you must have overdrawn more than the balance in your account. You know what that is, overdraft. It is a liability to the company. Then let us go into illustration. Let me show you just a little example of how you can post when it comes to accounting equation, because with these things, they are the foundation of accounting. If you cannot eat very well, it will help you anytime, anywhere, to do your posting, to do every work you have in accounting. Now, look at it. Administration. Mr. Amadi deposited the sum of 600,000 naira cash in the bank to start up his business. 2. He brought in a vehicle worth of 2 million naira for running of the business. 3. Bought goods by check at 400,000. He bought inventory on credit at 500,000 naira. He paid for telephone calls by check at 1,700 naira. He bought stationaries for the company through bank check at the cost of 30,000 naira. Mrs. Sobun paid the sum of 50,000 naira as her annual house rent to the company. Mr. Amadi drew the sum of 45,000 naira by check for the business. He paid his creditors who supplied him goods the sum of 28,000 naira. Now look at the posting, how we are going to do it. The number one question, that Mr. Amadi deposited the sum of 600,000 naira cash in the bank to start up his business. Now, when you look at the examples I gave you in assets, you can see that 600,000 naira is an asset. So it should be posted under assets. This is money coming into that business, the sum of 600,000 naira. And you can see it is a positive sign for the business. You can see the sum of 600,000 naira. It is here as an asset under asset. Then coming to double entry posting. Double entry now means once you have posted here, you still post either equity or liability. Now, where is this 600 naira going to? It is going to equity because it is a capital. Remember my example. I said capital is under equity. You can see it, capital. So now this is a capital money coming into that business. It is 600,000 naira under equity. Then number 2, he brought in a vehicle worth of 2 million naira for running of the business. A vehicle for running of the business, which means another thing is coming in favor of the business. Vehicle at the cost of 2 million naira. You can see that vehicle is a plus to the company. You see it here, 2 million naira. Then where is this vehicle going into? It is a capital. 2 million naira worth of vehicle is a capital, so it should be posted under equity because it is a capital to the business. Then another one, he bought goods by check at 400,000. Goods is also the same thing as inventory. All of them are under assets. So you can see here now, this is goods worth of 400,000 naira. It is a positive sign for the company. So you can see its goods now. This is 400,000 naira inventory. It is a positive sign for this company. Now the double entry now should be under assets again, because this 400,000 naira worth of goods was done under this assets. This is bank. So 400,000 naira is going out of the bank now. It is under bank because it went out through check. It was through the bank. So check is, all of them is under bank. It means 400,000 naira as positive. You can see sign of brackets in account means minus, that money has gone out of the company. Money is going out for buying of these goods or inventory. So you can see it is a positive sign for bank, and then it is a negative sign for bank and positive sign for the company. Now another one is he bought inventory on credit at 500,000 naira. He bought inventory, another positive sign for the company. He bought in, which means inventory is coming, that is goods under assets. You can see 500,000 naira now under assets. It is coming. It is coming to boost the inventory of that business. So it is now under assets, which means 500,000 naira is under assets. Then on the double entry, it means 500,000 naira should go to liabilities, because he said he bought inventory on credit. On credit, remember, credit is liability. Creditors here now. You can see it, credit is under liability. So it should be posted under liability. That 500,000 naira is here now. It is a liability to the company because he is owing. Loan, it means that you are owing, or maybe you borrowed money owing somebody, or you bought something on credit. So it is a liability to the company. You can see it, 500,000 naira under credit. Creditors is under liability. Then another one is he paid for telephone calls by check at 1,700 naira. Paid for telephone calls, which means it is money going out. It is money going out from the bank. 1,700 naira. You can see it under brackets here. Money is going out here. And then under equity, it is an expenses. It is an expenses. Money, it has decreased. So money is going out. Expenses, all these things are under equity. Another one, you can see it here where I wrote expenses under equity. So this is expenses. You see it here under equity, and it is going out through the bank or access money. Now another one is he bought stationaries for the company through bank check at the cost of 30,000 naira. Stationaries, as he bought stationaries, it is through the check. Money is now going out. Money is going out of the company. So it is 30,000 naira under asset, that is bank. Money is going out, and then it is under this, it is a capital coming into this through, that is equity. You can see it here, stationaries under equity. Now another one is Mrs. Obum paid the sum of 50,000 naira as her annual house rent to the company. That he paid the sum of 50,000 naira as her annual rent to the company. It means money is coming in. Money is coming in. Money has come into that company under 50,000 naira. Somebody paid in something, so it is a positive for the company. And then it has added to the capital of that company, which is 50,000 naira. It is under equity. And then another one is Mr. Amadi drew a sum of 45,000 naira by check from the business for his personal use. You can see it, 45,000 naira. Money has gone out of the business through the bank. He withdrew. Mr. Amadi drew. You can see drawings is under equity. Drawings. He drew the sum of 45,000 naira. Drawings under equity. So then this drawings under is money. Some is by check, which means it is through bank. Bank is under assets. You can see it, check, and then bank under assets. This is 45,000 naira. Money has gone out of this company, and then it is like we said, drawings is under equity. You can see it, 45,000 naira here under equity. Money is still going out of the capital of the business. Then the last one, the last example here now is he paid his creditor who supplied him goods the sum of 28,000 naira. 28,000 naira, which means money has equally gone out of his asset. 28,000 naira now is under bank, under assets. Money has gone out. And then coming to double entry, you can see it is a liability, 28,000 naira to his creditors. Creditors under liability, you can see it, creditor under liability, 28,000 naira. So when it comes to this double entry, you can see that all these things, when you add it up together, you can see that all of them are equal. You make sure that this side is the same thing as the other side. Thank you for now.